I want to start off with your expectations for FedEx. By the way, you have a higher price target than the rest of the street. Your price target, $340. What makes you so bullish on FedEx? What are you expecting in this report?
Well, look, as you mentioned, the key is the forecast for next year, and it's all about that $2.2 billion of drive savings, and that's a gross number. So what are they actually going to bring to the bottom line? We're actually looking for a below consensus number. We think the loss of the Postal Service contract is going to cause about $1 hit to earnings from what would have been even bigger earnings. But when you're talking about a $2.2 billion of cost savings potential, the ability to bring that down to the bottom line in the midst of a $4 billion drive cost savings program, another $1.8 billion was done this year. That's really the excitement for FedEx, right? This is trying to align their cost structure with their big comparable UPS, their peer. And they really need to focus on this cost cutting, which is going to bleed into next year when they start combining Express and Ground into one consolidated network. That's the excitement. And if they can tell that kind of story, that it's actually working and you're seeing those savings, that's the takeaway from FedEx. And that's where we find value. So it's, again, earnings will accrete. And that's why we've got a multiple that sets that target. But really, it's all about the beginning of this story and getting those cost savings through the earnings.
You know, it's not like you're saying this is a big quarter overall for CEO Raj Subramanian, who's taken over the company in recent years, faced some activist investor pressure to make some changes, and some of those changes are coming to fruition. I want to go back to that United Postal Service or U.S. Postal Service contract that FedEx lost. You don't want to talk about a narrative. When FedEx lost the contract, they basically downplayed it, saying it wasn't that big of a deal. I've spoken to some of your peers, including over at Wells Fargo. They believe that this is going to be a $500 million hit to profits next fiscal year. Does that jive with the $1 that you're seeing off profit? I mean, are you seeing similar numbers?
Yeah. We talked about over $400 million loss of profits, right? They went from $1.9 billion of revenue to $1.5 billion. That lost that $400 million at least. Then when the contract ends in September, that remaining $1.5 billion, which they said is running at break-even operations, will go away. And that's at the start of September, at the end of September, is when they can start pulling away the cost. So now they can start realigning the network. They've got up to 110 daily flights. Used to be 30 before they took on the postal contract. So you can start getting rid of the cost of pilots, day sort employees, the extra equipment you've had in place for that business. And so that's what you can start starting at the end of September. You can start eliminating those costs.
What are our expectations for the other parts of the business? The B2C e-commerce delivery business, also the trucking business. We don't talk about it a lot, but FedEx, the biggest LTL trucker in the U.S. What are you expecting from those other two segments?
Yeah, you're right. On the ground side, we expect. Let's just start off with very little volumes, right? We're barely positive on volumes. They've been down mid-single digits the last 2 years, maybe even double digits 2 years ago at ground. So we're looking for kind of break even to slightly positive on volumes. It's about pricing. They're finally charging a little bit better in terms of getting paid for what they do. And that's their focus. That's what was missing. That's why they got rid of Amazon's business back in 2019. UPS obviously continues to suffer as Amazon pulls more business onto their own network. So FedEx, the story here really is now that they've realigned their network, it's to fix that cost structure, which is still bloated. And that's why you have this $4 billion cost-cutting story, the $2.2 billion next year. And that's what people are going to be looking for, to see how much of that now comes down to the bottom line, and has FedEx finally fixed their capital spending needs. You know,
over the weekend we saw a big logistics deal with RXO buying Coyote Logistics from UPS. Does that impact FedEx at all?
Not really, because they're not. This is more of a truck brokerage story, right? What RXO is buying is more truck brokerage, and that's they're getting $2.3 billion of revenues, $86 million of profits. So a very low margin business on a net margin, but that is RXO's specialty, right? They're looking to gain scale in the brokerage business, compete better against C.H. Robinson on that truck brokerage operation, an asset light business. Obviously, UPS and FedEx are asset heavy companies where they're making that final mile delivery. That's really the focus here. You mentioned the LTL sector. FedEx is the largest LTL company, and given Yellow's bankruptcy last year, companies like Old Dominion, Saia have really taken off. XPO, these companies have really benefited from that, and FedEx is the leader within that LTL sector.